the market has ebbs and flows. I mean, when you look at market history going back a couple hundred years, there are good decades followed by bad decades followed by good decades. And this is just the way the market has gone. You're going to have a bad decade where for as long as 20 years, there may be ups and downs in the market. But at the end of that, decade or two long period, no growth at all in the market. And then those decades are going to be followed by decades where you have double-digit returns.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, had a little mini crash yesterday. Today it's December 19th. We had the Fed cutting rates by 25 basis points, but saying, hold on, not so fast, if you could believe anything they say. And of course, the market responded negatively. The dollar, interestingly enough, was up. Rates went up. The 30-year went up to roughly 4.7 and change. What is going on here? Let's talk with our good friend, Anthony Saccaro. Get the lowdown. Anthony, great to have you back. So what the heck happened yesterday?
Yeah, Kerry, thank you for having me back. Great to be here on FSN. Love your show. Yeah, yesterday was interesting. When I looked at the stock market in the morning, it was up. Up a decent amount. I think if I remember right, was up over a couple hundred points. And then later in the afternoon, after the Fed chair spoke, it wound up going down negatively several percent. The reason, as you noted in your introduction, is really because of the fact that there was more of a hawkish tone set for 2025 as far as lowering interest rates. At the beginning of this year, you might remember that the Federal Reserve was going to lower interest rates 6 or 7 times this year, and that didn't materialize. They've lowered interest rates by now 100 bips, including yesterday, and they were widely expected to go maybe another 100 bips next year. But the hawkish tone essentially said, no, not so fast. We might not do that. We might not need to do that. And of course, the stock market doesn't like that. The stock market's been banking on low rates for decades, quite frankly. And really, other than the past couple of years of rates have been up, they've been banking on rates continuing to go down. So when Jay Powell talks about the fact that, they may not have to lower them as much next year, that sent, the stock market in somewhat of a tailspin. And I think it was the 10th day in a row that the Dow Jones was down, something that hadn't happened since that hasn't happened since like the mid 70s, if I'm correct. So it all had to do with that hawkish tone. That's primarily what happened with the market yesterday.
Well, so interestingly enough, we had this election, as you said, pre-call capitalism or whatever you call it, freedom is good for another 4 years. Anyways, we had the failure of the continuing resolution and pork-laden spending in the Congress, and that was only going to take us for 3 months. And yet, in the rest of the world, all their governments are crumbling, from Canada to France to West Germany to China. Now that Trump's been elected, don't you think that the international flow of funds is going to go way, way up to the U.S.? It's already high because of the relative safety. We're the best looking house in Baltimore. But now the house has got some new drapes and a paint job, and the lawn's been trimmed and put in some sod, and we're looking really good. It's going to be a flood of money here, isn't it?
Yeah, it's funny that the cleanest, dirty shirt in the laundry basket, right? And I agree with that. Everything is going haywire, internationally and globally. And America is certainly the highlight of world economics. And you're right, that flood of money is going to come in. It's going to make the dollar stronger. It's going to make it harder for exporters to come in. And then if Trump adds the tariffs, which we know that he's going to do, they're already there from his pre-era. He's talked about adding them, additional. That's going to make things more expensive as well, too. The concern that I think the Fed has and why they were so hawkish yesterday is because GDP is doing really well. That was also shown in the report that came out today. I think it came out at 3.1% if I looked correctly. But the reality is that GDP is strong, the labor market's strong, inflation is tamed, and everything looks good. And people are feeling good about going forward. Now, that is if you're in the Trump camp. If you're in the not-so-Trump camp, then you might not be feeling so good. But the general sentiment, consumer sentiment, is up a little bit, and people are feeling good. It's the wealth effect. The wealth effect is a very simple effect that says the better you feel about life, the more you're willing to spend. And right now, everyone is feeling pretty good. So people are out there willing to spend. And even internationally, people are feeling good about America. So it's not just nationally, but it's also internationally. And if you're going to be investing, where are you going to invest? One of the countries that you mentioned, or, the country where everyone, including its own citizens, are feeling good about going forward. The concern that I have, though, is that the market has ebbs and flows. I mean, when you look at market history going back a couple hundred years, there are good decades followed by bad decades followed by good decades. And this is just the way the market has gone. You're going to have a bad decade where for as long as 20 years, there may be ups and downs in the market. But at the end of that, decade or two long period, no growth at all in the market. And then those decades are going to be followed by decades where you have double-digit returns. And, that's just the way history is. If you go back the last 2 decades, you go back 25 years to the beginning of the century, from 2000 to 2013, there was no growth in the market. We had the crash of 2001 and a recovery. We had the crash of 2008 and a recovery, but no growth over that 13-year time period. And then from, for the last 14 years, the market has gone up well over 15% a year. So we've followed the trends that we've seen over a couple hundred years. We had a bad decade, and then we had a good decade. And if history repeats itself, as we know that cycles do repeat themselves, hence the term cycle, then we could be in for not such a good decade going forward. And all the bad decades start with a major crash. The crash of the decade starting from 2000 to 2013 started with that 50% crash in the tech stocks, as well. And by the way, since we're at it, if you go back and you look a few years before, you look at 97 to 99 to even 2000, the market went straight up. And if you take a look at what's happened in the last couple of years, market's been up over 20% for 2 years in a row now. It's what if it closes above this level, it looks like it's going to. And that's something that's happened only 4 times in the last 100 years. And after that, the story is mixed. But the reality is that signals, just from an economic standpoint, it signals the fact that we could have problems ahead. And my biggest fear, Kerry, is that people that are in their 60s, a little bit behind in retirement, getting that FOMO caught up in this. I'm going to take all my retirement money and throw it in NVIDIA or throw it in, the QQQ, right? Throw it in NASDAQ. And now all of a sudden, right before they want to retire in the next, 1 to 5 years, the market crashes and now they can't even retire. And that's the biggest fear that I have for the baby boomers, the biggest generation, at this point that's ever retired. So a lot going on.
A lot going on. So, where do you think AI fits into all this, Anthony? I think, look, I'm a proud Tesla owner, not because I think I'm saving the world. I'm probably doing more harm to it than anyone driving their big Mercedes. Maybe not. Who knows? I don't really care about it. I love the experience, but I'll tell you what, the latest update for full self-driving, as they call it, supervised FSD, is, I'd say, 98% of the way there. When I first started with the FSD, which was 2.5 years ago after they released it to the general public, that thing was scary in certain instances. You had to watch it like a hawk. Now, the thing could drive in New York City and and avoid New York City taxis. It's a freaking amazing thing here. But what is really amazing is 6 months ago, I said, and maybe 6 months, a year ago, I said, oh, it'll be 5 to 10 years before they work this out. Now I'm thinking 6 months to a year. And that's the thing. The AI, it's not just the AI is growing by leaps and bounds. It's the rate at which it's advancing is like nothing we've ever seen before in life here, Anthony. Nothing. And that goes for coding. I'm looking at my iPhone, just got the update, and, I know that the new iOS system, a lot of it was written by AI. There's no way they could have added all these features this quickly without AI. I don't know where we're heading, but we're heading there really quickly, Anthony.
Yeah, 100%. It is amazing. I don't quite understand it. I've heard the CEO of NVIDIA talking about it. And when you listen to someone who actually knows what they're doing and really on the forefront of it, NVIDIA is certainly on the forefront of that. It is amazing exactly what it can do. Couple of things about AI. It certainly is going to be a massive disruptor to, business as we know it, making everyone more efficient. And it's coming at the speed of light, as you suggested. The reality is that we get questions from investors, fairly frequently, wanting to know, how do we invest in this? And it reminds me of, investing in tech stocks back in, 02, 03, as we started to come out of the tech crash. People were just wanting to do that. And even back in the late 90s, tech stocks were even more so in the late 90s, I would say. Tech stocks were the thing that people were asking about. It then also reminds me of people asking us years ago about cannabis. It's like, what's that one stock that's going to take us to the next level? And what you have to remember is that for every apple, there were probably 10,000 Apple wannabes that went by the wayside that, you would have lost a lot of money in. And there are people now that are looking for what is the next Apple in the AI space. And I don't think you want to be looking for the one stock to take your money and just put it into one company. Not a wise thing to do. If you're going to focus on the AI, or if that's the direction you want to go, I think what you really be better off doing is focusing on companies that are utilizing AI to some degree, regardless of what platform that they're using. But AI itself is very, in some ways, scary. I mean, if you're not excited out of your mind or scared out of your mind by AI, I think you just don't understand it. It's going to be one or the other. And quite frankly, I'm a little bit of both. On a very simplistic level, I almost don't write an email anymore without AI, because I can tell ChatGPT what I want the email to say, and it spits it out a professional email in about 10 seconds. That might take me 15, 20 minutes to write, even if it's a simple email and it's a copy and paste. That's very simplistic. Using AI for our business. I've got all of my team members using AI when it comes to things like putting job advertisements. AI, when it comes to more advanced AI in the pharmaceutical world, can analyze you and analyze the results of a test in a mathematical way that you and I or any human being could just never do. And it's going to accelerate some of the cures that we potentially have by being able to take massive amount of data and analyze them and then give you and I, the results. So, so the reality is there's tons of positive, and all of that excites me. What doesn't excite me is the fact that you now can be someone that you're not. So there's a lot of ways to do that. On a very simplistic form, we're hiring people. I just hired 3 new people that are all starting within the next 2 weeks. And the reality is, when they submit their resume, I really now have no idea whether it's their resume or AI. So you don't really know whether it's them. Before, if I would see a resume, going back 20 years, I want to hire someone. If there's a spelling error or something, I know that they're not attention to detail, and it's something that I keep in my mind. Maybe I don't hire them because of that. Maybe I do, but I know that it's their resume. I can see their writing style. I can see how they think. I can see if they run all their paragraphs together. I can see whether there's spelling errors or grammatical errors or whether they have a flow. Nowadays, you take whatever you are, put it into AI. You could just give them a couple sentences, and it's going to make you look like anything you want to look like.
Freaking genius.
like a genius. You don't really know anymore. Yeah, and that's on a simplistic level, but on a more advanced level, I was watching a video the other day of one of my buddies who created a presentation, and at the end of the presentation, it was about a 15-minute presentation. We were watching great presentation. At the end of the presentation, he got up on stage and said, "That wasn't me." And we were like, "Well, what do you mean that wasn't you?" The reality is, it was all AI generated. It was him talking, but it was typed in the script talking. And you now can go hijack any other person and essentially get them to say things that looks like it's coming out of their mouth, but it's not really them. And that's the scary side of things. That right now,
that's frightening.
Yeah, it is frightening.
Well, I just wrote a book. I took a compilation of all my interviews with noted economist Martin Armstrong. Been interviewing him for 14 years. I had it transcripted, had to clean up the transcripts, and then I would write things down to create summaries and key takeaways, but it formatted it, and it's almost perfect. And I'm just waiting for the go-ahead, and it's going to go to press. And I think it's a valuable book. He was, when I first started interviewing him in 2011, stock market, the Dow Jones was at just under 12,000. He assured me it was going to 35 and then 45. In 2018, he said it would hit 45,000 somewhere between 22 and 24. You spot on. Point is, I think the world needs to know about this, and I wouldn't be able to publish it without the AI. It would have cost me tens of thousands of dollars. I would have had to have the thing transcribed and then edited and then cleaned up. I would have paid an editor probably $25,000 to $50,000 to get this book to the point where it is now. So it's a force multiplier if you use it right. But at some point, it's like, what does it need us for at all?
That's right. Yeah, you're 100% right. And I'm going to be coming out with my second edition here, and I'm going to do some rewrites on it probably over the course of the next 12 months. And the first time I wrote the book, we didn't have AI, and it was all, handwritten, and all my thoughts and everything else. But there's some things I want to change, and I know that I'll be able to go and copy a paragraph that's currently there, plug it into AI, and tell it this is what I want to change about it. Change this number to this, change this number to this, bring the current statistic up to this, and it will just do it automatically. And it's scary, amazing, but it's also very efficient as well too. And and I think the efficiency of it, as we start to learn how to use it, as companies start to learn how to use it, I think it is going to go directly to the bottom line of companies. And I think that is something that should be exciting, something that people, will be excited about. And there are people that are worried about it's going to take jobs. I think as many jobs as it may take, I think it will also replace because of the fact that there still has to be human beings, behind the scenes. At least I don't believe it's ever going to run by itself. Some people say that AI is going to take over the world and, collapse the world. That to me, that's garbage. I just don't see that happening.
Yeah. Well, it's so interesting because, if you really know how to program the AI, you can program it to automatically scan your emails consistently, shoot out a summary every time one comes in, tell you which is garbage. You can do things with it, updating calendars, writing stuff. I mean, you can basically automate 80% of your workflow. So it's going to be interesting, that's for sure. In the meantime, before AI takes over, humans are going to be running the show. Do we expect more of the same from Trump, or is this administration going to be different? You and I were fairly close in age. We've seen a lot of administrations come and go, making promises, most of them never fulfilled. The only times I ever saw an administration that really wanted to change things like this were JFK, which I was kind of young. He won the 1960 election, and Reagan. And then Reagan, he was talking about the Federal Reserve and all of that. Then there was the assassination attempt on him. And then it just became more of the same, right? The corruption, which led to the Bush corruption, the CIA, Iran-Contra. Are we going to see something different this time?
So The first thing about Trump, I know, people love him or people hate him. I don't necessarily love the antics and the criticisms and, how he deals with things, but we're not hiring, we didn't hire an emotional therapist. We hired someone to run the country, and you have to have a backbone to run the country. And if Trump has anything, it's a backbone that, most people couldn't handle anything that, or any of the things that he's gone through and then still come out. In the first 4 years, he did what he said he was going to do. And putting tariffs, there were no wars in that 4-year time period. I strongly believe that, if someone with the backbone had been in the office for the last 4 years, I don't think a lot of these wars would have occurred. I think he would have kept them from occurring. And I think that a lot of them will end, because he gets back into office. So I think it's going to be more of the same, which was good because he actually did what he said he was going to do, unlike most politicians. He got tax cuts through with the Tax Cuts and Jobs Act, and that, helped increase profitability for companies. And a lot of people don't understand that. If you're on the left, you want to tax the rich. The reality is it's the rich that give everybody else jobs. This year we're just finalizing up with our taxes, and I paid over $1 million in taxes this year. And I was talking to one of my staff members the other day, and I said, "You realize that, if I'd have paid half that amount, I could hire 10 more people, and that means that you have 10 more people that are actually out there productive, buying stuff, paying sales tax, paying income tax, and it's not because they, it's because of the fact that it's pro growth, and Trump is pro growth, and all of his policies are pro-growth. And I think because of that, the next, at least 9 months or a year, I think are going to be good. It goes back to the cycles we talked about, Kerry, that at some point in time, it doesn't matter who's president, cycles are going to happen, and anything geopolitical could happen to cause us to, to turn around. So yeah, I think it's going to be more of the same, which is good. But the one concern that I could have, it's not a major concern by any means, is that this is his last term. And because he doesn't have anything at this point to lose, the question is, does he go overboard a little bit? He is zealous for this country. I believe that. I believe that as a businessman, he sees the debt we're in. You can look at any company and realize there's waste in the company. You could look at the government. Oh my gosh, how many billions of dollars of waste are there? The fact is that he's got Doge started, or going to go that direction. With Musk, there is so much waste, and so I think all that's good. But does he go a little bit overboard because he doesn't have anything to lose? That's the one concern that I could have. Although I'm not terribly concerned about it.
Well, that's a plus and a minus, right? And what is overboard when the country's got facing upwards of $40 trillion in debt by the end of next year? Can you go too far overboard?
Yeah, that's a great point. And, if they go in, it's scary to me to think how much waste they can actually cut out. It's just going to be hard to do. What you have government agencies that were started for some reason and had a mandate and then started moving into other things that they were never even supposed to do, and then no one ever checks them. There's no guardrails on any of that stuff. And now you've got tons of agencies that are overlapping each other, and you go in and clean that up. The hundreds of billions of dollars is just, that they could save, and no one would notice. I guarantee you, no one would notice with all this, all this waste that is going on.
Which is great because, we have 500 some odd agencies. They said, I don't remember if it's 400 or 500. Musk wants to cut it down to 100. Do you think the average person's going to notice, other than the consultants and the people living off the fat, the grifters? Will anyone notice it, Anthony?
No, that's the thing, is they're not even going to notice. There's so many different, bureaucracies going on right now. And that's one of the things with, last time, where he deregulated a lot of things. Look, I'm for regulation. I think regulation needs to be there. You can't just let the banking system run willy-nilly without any type of guardrails or without any kind of oversight. Regulation is a big deal, but you can have too much regulation. You have to give corporations the ability to, the freedom to be able to operate within a structure. And the more regulation you put on them, the less choices we have. And the more it winds up costing just for compliance purposes, and the less effective we're going to be as capitalists and as owners of these corporations. And so when you deregulate, it doesn't mean deregulate to where you allow everyone to be irresponsible. It just means let them do their business within certain confines. And that is good for business. So that's another reason why I think, the next 4 years is possibly going to be good. But the reality is these cycles still are concerning.
Yeah, the cycles, the debt cycle, just getting rid of a few wars has got to be a big plus for the world, huh?
Yeah, that's right. 100%. And I don't think that the wars would have started if in fact Trump had been in office. And I do think that they've got the ability to come to a resolution. He just has the backbone to do it. And you almost feel like Putin knows that he'll do what he says he's going to do. He's done it before. China's a concern. Xi Jinping, over there, that's one of the bigger concerns to me. And the potential technological warfare. Their military is built up a lot more than ours. They've surpassed us at a military standpoint over the last 4 years. So we've got to get back in, and we don't necessarily need to get to a point where we're better than they are. We need to get to a point where we can just defend ourselves if they attack us, and make it so that they can't attack us, or if they do attack us from a the standpoint of technology, that it's going to be too expensive for them. So I feel like we're behind in that arena, and I feel like that if there's one area that they could get us, it is that technological killing the internet. What would happen if the internet got killed?
Oh, man, that would be a massive instantaneous depression.
Yeah, I mean, think about banks not being able to access your money anymore. We're so reliant on the internet. And that takes us back to AI. Kerry, I believe that in the next 2 to 5 years, we're going to be just as reliant on AI, everybody, as we are now on the internet. And that's kind of what you were alluding to at the beginning of the show, is that's where it's going, as well, too, is we're going to be reliant on that more so than the internet. Imagine not having to go to Google. Imagine just being able to type in whatever you want to Google, and instead of having a whole bunch of, Google basically says, you type in something, you go, hey, I have a question about this. Google basically says, I don't really know, but here's all these people to go look at. Now what's going to happen is AI you're going to type in a question, and you can already do this. You type in a question about anything, and now it knows, and it takes all that information, assimilates it just like that, and gives you whatever you want. It'll give you a college page report, or it'll give you a 1-paragraph summary, depending on what you tell it.
Yeah, well, imagine when one day when you say, what's Google?
That's right. That's exactly right.
Because you're not going to need Google anymore, basically, right? It's going to be, right? We're going to not use it anymore.
Yeah, you're not going to need it. It's going to be outdated, or, and they're keeping up with it. So if they're smart, they'll keep up with the AI craze, and you'll still need them, but it won't be to the degree that we're using them right now.
Yeah. All right. Well, a lot of interesting things coming. Anthony, tell us, where do we find you? How do we connect with you on the web?
Yeah, thank you. So AnthonySaccaro.com is a great place to go. And morelifethanmoneybook.com is a great place to go as well, too, if you want to read about the 10 most common mistakes that retirees make in retirement and how to avoid them. So AnthonySaccaro.com or More Life Than Money.
All right. Excellent. Hey, there's a link in the show notes to this interview on financialsurvivalnetwork.com. Please sign up for your free newsletter when you go there, like 60,000 other FSN members have. And if you've got a question for Anthony or myself or AI, tell us your experiences with AI, how it's helped you, how it's hurt you. KL@kerrylutz.com is the email address. Anthony, appreciate you stopping by. We'll talk to you again soon.
Kerry, thanks for having me.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.